Reliance Industries, of course, is expected to report the highest profit growth in almost 4 years. And some of the profit boost is owing to corporate tax cuts. Somit Sarkar is here to tell you what the street is pricing in. Somit, over to you. Morning.
Good morning, Alex. If you see on a standalone basis for the second quarter of financial year 2020 compared to last quarter, the revenues of the company are expected to be flat. The EBITDA is expected to be higher by nearly 9%, and this will be for the first time in the last 5 quarters that the company would report an EBITDA growth. Margins are expected to come in at around 17%, while the net profit growth of 7% is expected to be highest in the last 15 quarters for Reliance Industries on a standalone basis. Now, the gross refining margin, that is the key number, is expected to be higher by nearly 17% to close to $9.5 per barrel. Now, this is on the back of strength seen in the benchmark, that is the Singapore gross refining margin, which averaged around $6.5 per barrel versus $3.5 per barrel in the last quarter. However, Reliance Industries premium to the Singapore gross refining margin, that is expected to come down at close to $3 per barrel, which was the lowest in the last 17 quarters. Now, the improved refining business, that is the sharp recovery that we were expecting in the refining margins, coupled with lower ethane and LNG prices and higher petrochemical volumes, would partly offset the weakness that we have been seeing in the refining throughput volumes, and because of the weakness seen in the petrochemical margins. Now, the petrochemical margins are expected to be lower because of reduced product spreads. Along with that, if you see the refining EBIT is expected to be higher because of strength seen in the Singapore gross refining margin, while the throughput number is expected to be lower, that is the volume number is expected to be lower owing to the shutdown at the Jamnagar refinery. Petrochemical volumes, however, is expected to be higher compared to last quarter, because last quarter we had seen a shutdown of the petchem plant. That's the reason the Q-on-Q, the growth is expected to be higher. On the consolidated basis, if you see, the retail business is expected to see some growth slowdown because of seasonal weakness, while the overall net profit of the company is expected to be higher because of the lower tax benefit. Now, key things to watch out for from Reliance Industries earning would be GRM outlook, and if the management gives ahead of the IMO regulation that comes in. Along with that, the petrochemical margins that the company reports in this quarter and the outlook, and any future capital expenditure guidance that the company gives would be key thing to watch out for from Reliance Industries earning today.
All right, Somit, but we're also talking about Reliance Jio, and the lower tax rates will benefit that company as well. But what else is expected from the telecom arm?
From the telecom arm, if you see, the revenues are expected to be higher by nearly 6%, EBITDA is expected to be higher by 7%, margins are expected to come in flat at close to 40%, while the net profit is expected to see a jump of nearly 27%. Now, the average revenue per user is expected to further decline to 121 rupees in the second quarter of financial year 2020. Now, this revenue and EBITDA growth is aided by the strong subscriber addition that is expected to come in. Now, analysts are expecting the subscriber base for Reliance Jio to be close to 35.5 crore. That is a net addition of close to 2.4 crore subscribers in the second quarter, which will be aiding the revenue and the EBITDA growth for the company, while the ARPUs are expected to decline because of more JioPhone subscribers coming in the subscriber base, and they come at lower rental, and because of which there will be some ARPU dilution. And along with this, the cashback that the company has been given on the digital recharges will also dilute the ARPU further at 121 rupees. The net profit is expected to jump 27%, mainly on the back of lower tax rates that have been applicable now. And from the Jio broadband business, the Giga Fiber, analysts are not expecting any meaningful contributions in the second quarter of financial year 2020. Now, the key things to watch out for from Reliance Jio earnings will be update on JioPhone subscribers, any commentary of tariff changes, signs of declining capital expenditure intensity, increase in cost structure due to commercial rollout of Giga Fiber, and management commentary on and any other management commentary on Giga Fiber rollout would be important to watch out for from Reliance Jio earnings today.